Well, for more on how those Chinese firms are doing since their IPOs, CGTN's Karina sat down with Dan McClory of Boustead Securities. His company underwrites Chinese companies listed in the US. And she began by asking him which were the standout firms among those that listed in 2018.
There's probably three that come to mind. PDD, which is an e-commerce app that was backed by Tencent. Tremendous debut and ended up doing very well on the year. NIO, which is an autonomous vehicle startup.
Like Tesla
really,
in China.
It is, although they saw the light about autonomous vehicles way before Tesla did, and so they firmly moved in that direction. And then the third one, which everybody has heard about, is Cent Music, which made it out at the end of the year. And those are the ones that have stuck in investors' heads, and those are the ones that have garnered the most attention. But make no mistake, there's another 45 plus that all crossed the goal line for China last year.
So we see that Chinese companies listing in the U.S. in 2018 raised about $9 billion. Can you put that into context for us?
We'd have to go back to 2014 to find the next best year, and that was somewhere around 29 billion, but that was really influenced by Alibaba coming to market and raising 25, the world's largest IPO to that date. So you take the 9.6, you look at Hong Kong, about 36 billion was raised there for companies in total. It's a very solid number. I call it the leading Chinese import that you never heard about, which is their IPO and all that capital that gets created from Chinese investors, U.S. investors, and the aftermarket.
So $9 billion a positive. On the negative, though, according to the Financial Times, people who invested in Chinese IPOs in 2018 lost an average of about 16% from the initial price.
Right.
Why the drop?
Well, that's like the rule of averages. It's, what's that saying? If you and I and two other people got in a car with Bill Gates, the average net worth would be 20 billion, right? Well, I'm working on my first billion, maybe.
So you say there's some real winners and
some real winners,
a fair amount of losers.
And some big losers that were outliers that served to drag kind of everybody down. I think an important statistic when I talk to my colleagues in places like Hong Kong that are underwriting IPOs there, their estimate is somewhere between 80 and 85% of all IPOs in Hong Kong last year are trading below their offer price. So you wouldn't say that same thing about the Chinese IPOs in the US. You would say that there were some in areas that suffered from changes in policy that were just seen as being out of favor. You think about peer-to-peer lending. You think about alternative payment systems that involved lenders that were really not in the mainstream. And those companies their valuations were beaten down.
In terms of performance here in the U.S., you mentioned Cent Music. Now it priced on the lower end of the range, which is quite unusual, and yet it still went ahead with the IPO, which again, also unusual for Chinese companies. Some investors are saying that indicates that there's less appetite for Chinese companies in the U.S. What's your take?
Well, let's take apart who's really buying these Chinese IPOs in the U.S. First and foremost, the majority of these companies are backed by solid, strategic, long-term, and even early-stage investors from China and Asia. So they're not showing up in New York penniless with no idea of who to get money from. They've got some serious backing. And so those backers ultimately want to engineer an exit. So there are many companies, like companies that we take public at Boustead, that we show up in New York to do the roadshow, and we've pretty much got the whole deal already put away. And so the Western investors are kind of the icing on the cake. So in terms of the Cent Music IPO, I affectionately refer to it as kind of the great melting ice cube because it started out huge and it got smaller and smaller and smaller. But ultimately, they were confident in their business. They were pragmatic about getting the deal done, getting out there. Because in the US, there's always the opportunity to go back to the well, to do a follow-on offering, to raise more money at a higher valuation. If the market doesn't get it today, that's fine. We're in this for the long haul. So I think that's that's the attitude a lot of the Chinese companies had.
We've got some big IPOs anticipated from China. Ant Financial, Duty Shocking. Where do you think they will list?
I think both of them are taking a very serious look at the U.S. for two really different reasons. What DD is doing is seen as something that's very well understood, very present in our market. No big leap to understand, gosh, what do these guys do? So I think it would be well received here. Ant Financial, a different reason. So Ant Financial, which is, of course, the payments arm of Alibaba, they're facing some regulatory rulemaking that is still to be decided within China about how these alternative payment systems are going to be structured and licensed. And so there's a little bit of a drag on what they're doing in China right now, whereas the rest of the world is their oyster.
At the same time, we're expecting some big U.S. IPOs. You mentioned Uber, Lyft might as well, Pinterest. These are speculation. How will that impact the performance of some of these Chinese IPOs? Will it be positive or negative for them?
I think it'll be positive, providing they perform. So but you know, the U.S. is pretty good about policing its ranks. If an IPO is not going to do well, it's usually taken off the market for a period of time, and then it sort of comes back and flourishes later. So obviously, if Uber gets out first and it does tremendous, and Didi rides behind it, no pun intended, off you go. That's simple.
Now, 2018, a great year for Chinese IPOs in the U.S. What's your outlook for 2019?
Another banner year, and I think it's going to be front-end loaded because there was a big funnel of deals that moved from 2018 to 2019, so you're going to see more activity in the first half of this year than maybe you might. And then, to your point earlier, as these technology behemoths start to get untracked, both in the U.S. and in China, I think that's going to spur even further activity. But I wouldn't be surprised to see another record-setting year in 2019.